Technically, my retirement is also closer than ever. Well, joining us now is Kelly King. He's a senior advisor to KSK Ventures and the former CEO of Truist Bank, as well as its predecessor, BB&T. Kelly, good to see you. So off of JP Morgan for a moment, I was kind of expecting to see more consolidation in regional banks right now. Maybe the fact that we haven't gotten more is a signal that the banking sector as a whole is healthier than many expected at this point.
Well, John and Morgan, thanks for having me. Good to be with you. Yeah, well, I think if you take a long view, you should expect to see continued consolidation in the industry. The reason I think you're not seeing so much right this very moment is there's still a settling down period after the pandemic and after the reaction from the regulators, and everybody's trying to figure out, will mergers get approved and what level of mergers will be approved. So all of that is fairly short-term in nature. However, I believe if you take a long, or even intermediate-term view, John, you'll see a continuation of a substantial consolidation in our industry because it's completely rational.
Kelly, why aren't we getting more deposit flight from larger banks that aren't offering a lot in terms of interest rate on savings right now? It seems like in some circumstances, depositors are willing to move things around for a better deal. But so far, that reticence to do so is helping some banks.
Yeah. And so it's important to think about the nature of depositors. You have some depositors that are, basically one product oriented. They may have a CD with a bank or a special purpose savings account. Then you have other clients who have been with the bank for 30 years. They have all of their business with the bank. You have small businesses that do all of their business with the bank. And so their relationship is much more than the deposit levels. And so those clients are very, quote unquote, sticky, as we call it. They don't tend to wake up in the morning and just move their deposits if they can get a 10 basis point improvement. So the fundamental funding structure of the banking system is really sound, stable, and that's why you've seen the resilience that we've seen even in some challenging times.
Kelly, it's great to have you on the show. I do want to go back to those comments that we just kicked off this discussion with from Diamond, and specifically the fact we do have all this regulation on the table, some of it U.S.-centric, some of it a little bit more global. And the comments he made about the fact that we've already seen 80% of mortgages driven outside of the banking system, it casts a light on the so-called shadow banking system and what we've seen, whether it's non-bank mortgage lenders or other aspects of the private markets. And I realize I say that knowing there's some nuance here. Private credit, for example, works with the banks on certain deals along the way. But how to think about these dynamics and how they continue to evolve as you do have a regulatory environment that's only really in an aggressive way affecting one part of this broader lending economy.
So, Morgan, that's such an insightful question. If you go back to 1972, when I started my career, the banks and savings and loans, which many people don't even know what they were, at that time controlled about 80% of all the loans and deposits in the banking system. Over time, we saw the shadow system, private credit system develop, and you saw a huge percentage of normal banking assets and deposits move away into private credit, into money market funds, and that has continued. It's ebbed and flowed. It got to a pretty high level as we headed into the Great Recession, and then we found out that when times get tough, people look at whether or not those funds are secured or protected, and looking back then, the regulators had to step in and support those areas of lending and depositing. And so we've seen that develop over time. It continues to be material. But here's the point. I think this is what you were alluding to. We need to pay more attention to the private sector, the private funding, the private lending. There needs to be reasonable regulation and supervision over those areas. Having such a distinct separation between banks and those other areas, which are now a huge portion of the total financial market, is not rational. And I would say, with all due respect to my friends that are regulators, if they spend a little bit more time worrying about the private section and the shadow banking system and trying to pile more regulation on banks, we'd be a lot better off.